All right, let's jump right in. Today, we're talking about something that is, quite literally, the lifeblood of any business out there, from the smallest startup to the biggest global giant. We're talking about financial management.
You know, every single organization on this planet, I don't care what they do or how big they all face one massive, fundamental challenge. It's this one universal problem that really separates the businesses that make it from the ones that don't.
So, what do you think it is? What is that number one reason that so many businesses with brilliant ideas and passionate people end up closing their doors? Seriously, take a second. What's the first thing that comes to mind?
It's really that simple and that brutal. They run out of cash. It doesn't matter how amazing your product is or how great your team is. If you can't pay your people or your suppliers or keep the lights on, the game is over. And that right there is why this topic is so critical.
Okay, so if running out of money is the disease, then what's the cure? Well, it's the art and science of managing money the right way. And there's a name for that discipline, the one specifically designed to stop that from happening. It's called financial management.
And you know, what's so interesting is that this is not some new idea. Just look at this definition from the Encyclopedia of Social Sciences. People have been thinking about this for a long, long time. It's about handling a company's money through its entire life cycle, from day one through its biggest growth spurts, and even helping it get back on its feet during tough times.
So, let's put that into modern, everyday terms. What does it actually mean to do financial management? Well, it's the whole process. It's the strategic planning of where money is going to come from and where it needs to go. It's organizing those resources, controlling the spending to make sure you stay on budget, and keeping an eye on everything to make sure you're actually moving closer to your goals. Honestly, if you only remember one thing today, make it this. You can boil this whole complicated field down to two simple, powerful ideas. Number one, finding the money you need. And number two, using that money as wisely as you possibly can. That's really it. Find it, then use it smart.
Okay, so we've got a handle on what it is. But why do it? I mean, what's the actual end game here? What are all this planning and controlling supposed to achieve? Well, it comes down to 4 key objectives.
So these are the big targets. First, and most obviously, you need to make sure you have enough money just to keep the doors open. That's your funding. Then, of course, you want to maximize how much you make while keeping your cash situation stable. That's called liquidity. And the final big picture goal? To make the whole company more valuable for its owners.
Yeah, that last one, enhance shareholder wealth, sounds a little stuffy and corporate, doesn't it? But don't let the jargon fool you. All it really means is making the company worth more for the people who own it. That could be one person who started it in their garage, or it could be thousands of people who bought shares of its stock.
Right, let's get practical. We know the goals, but what do you actually do to get there? It's time to open up the Financial Manager's Toolkit and see what's inside.
And here they are, the 5 main jobs. You've got planning, investing, financing, cash flow, and risk management. It's all crucial, but we're going to zoom in on the 2 biggest, most fundamental decisions of the bunch.
So let's tackle that first big task we mentioned, finding the funds. How in the world does a company get the cash it needs to hire people, build things, and grow? This question leads to one of the most important choices a business will ever make.
And this is the choice, right here. It's called the financing decision. Basically, you have 2 main paths. You can take on debt, which is pretty much what it sounds like, borrowing money you have to pay back, plus interest. Or you can use equity, which means you sell off a little piece of the company itself to investors in exchange for that cash. Each one has massive consequences.
Okay, so you made your financing decision. You've got the money. The next logical question is, what now? What are you going to do with it? Where do you put that capital to get the absolute best results? And this brings us to the investment decision. This is all about being smart with where that money goes. Do you buy a new piece of equipment? Do you invest in a brand new technology platform? Do you expand into a new market? The goal is always the same. Pick the projects that are going to create the most value and generate the best possible returns. So when you pull back and look at the whole picture, you can see how all these pieces fit together to create a full strategy. The day-to-day stuff, like planning and managing cash, it all supports those 2 massive decisions, how you get your money and where you put it to build the future. So, let's wrap this up by connecting all the dots, because it's really important to see that this is so much more than just numbers on a spreadsheet. This is the key takeaway. Good financial management isn't just some department in an office. It is the engine of the business.
It's what gives a company the power to survive tough times, the foundation to become stable, and ultimately the fuel it needs to grow.
And this visual just nails it, doesn't it? You can see right here how financial management is the bedrock. You can't even get so survival without it. Once you have it, you can find stability. And when you really master it, that's when you unlock true sustainable growth.
So I'll just leave you with this one last thought. When you think about all this, deciding where to get money, where to invest it for the long haul, you realize it's not really about accounting for the past. It's about making the strategic choices that literally define what a company will become. So, is it just about numbers, or is it really about shaping the future?